Okay, coming into today, I said that I thought two things were likely. One is that the close of the day would be below the open of the day because we've had 6 days with the close of the day above the open of the day, 6 days in a row, and that happens very infrequently. And having 7 is even less frequent. It's possible that it has not happened all year. And the second thing that I said, I thought that if we opened within yesterday's range, that we would trade below yesterday's low. Instead, we gapped up. The big tail at the bottom of the bar, not ideal for a trend from the first bar bear. Big gap, so the odds favor an up day. That bear bar probably makes it 50-50. Okay, now you have 2 down bars in the first 30 minutes and 2 down bars in the first 30 minutes. Usually means that if you have a move in the opposite direction, it'll only be temporary and you'll get a test of the low. So in other words, if you have 2 down bars, I'm expecting a move above bar 2 to be followed by a move below bar 2. So I would not buy above bar 2. Side up bar, so you have bears who shorted below 1 and below 2 and they would stopped out, and you have weak bulls who bought above bar 2. So if the market goes below bar 3, those bulls will be stopped out. So it's a good situation, and I didn't think of that at the moment, at the time, and I didn't trade it. Problem for the bears, it's alternating bear bar, bull bar, bear bar, doji bar instead of consecutive bear bars, so that's not as strong as the bears want it to be. So it's possible that we'll get a 2-legged pullback and then a rally. Again, more alternating. Now we have a larger bear bar, so it's possible that the market is getting a little climactic in the area of the moving average. So in any case, once I have a sell climax after the trend's been going on for a while, I'm expecting a bar that goes below it, but I'm also expecting a pullback. So I'm expecting a high 1, a low 1. This arguably is a high 2 long above bar 9, but I wouldn't buy it. The channel is down too steep, and I think there'll be bears above here. We're close to the moving average. We should get there. Even the traders who shorted the close of 8 should be able to make a profit, which means that the market has to move 6 ticks below the close of 8. So I personally shorted up here. You could also short below 11 as a low 1 short. It's the first breakout of the micro channel, and there's room to the moving average. Good looking entry bar. Big tail at the bottom, so the market might be forming a final flag with 13 at the moving average. I wouldn't buy above 13 because 12 down too hard. But then when you get 14, you have a small double bottom. It might be good enough for a scalp. If you look at the bars of the day so far, the bear bodies have dominated the day. So I'm not looking for much of a rally here. I'm expecting either a trading range day or some kind of a bear day. For the bull scalpers, 15 is a decent bar, 16 is not good, 17 is worse. I don't know if we're in the process of forming a series of lower highs and lower lows. I think shorting below 17 is a little bit risky. You get 2 doji bars in a row. If we are developing a trading range, your entry is in the middle of the trading range, and that's not a good trade location. 20, possible higher low for a second leg up. Another doji bar, so that's 4 out of the past 5 bars. I would not buy above that. It looks like we're forming a trading range, and that would be buying in the top half of a relatively small range and above a doji. I think it's more likely that there'll be shorts above. Double top bear flag with 22 and a bear body. Might be an okay short, a little bit risky shorting in the middle of the trading range. The moving average on the intraday chart for the first hour or 2 often is different from that of the Globex, and I think this may have been below the moving average on the Globex. Some traders look at the Globex chart for the first hour or 2 of the day, and then they switch to the day session chart. One of my friends does that. So there might be enough traders who see this as a low 2 below the moving average for it to be good for a scalp. Market's trying to form a 2-legged higher low here at 24. But it's after a lot of bear bars and neutral bars. In the past 8 bars, there's been 1 bull bar. So I personally would not buy that. So that meant that 27 was a possible failed high 2, and you'd have trapped bulls. But I just don't think that many bulls bought there. This may evolve into a wedge bull flag. I personally did not short down here. To me, there's way too much two-sided trading going on for me to be shorting at the bottom of a trading range. Okay, 29 is the wedge bull flag buy signal. Again, it's after a strong bear bar and a bear signal bar, double bottom with the low of the day. I would rather take a second entry. This doesn't look strong enough for me. 31 became an inside bar breakout pullback short setup. The market could be breaking out to a downside breakout and then maybe a trending trading range day. The range so far is more than half of an average recent range, so it's less likely to become a trending trading range day based upon the entire range. It might become one based upon the range since 7 o'clock, so that's possible. The breakout bar at 32 looks good, but I shorted on a pullback, and I wanted to follow through on 33, and I didn't get it, and that made me nervous. And then on 34, I get out and started thinking that this might be a high 4, and it could lead to a test of the top of the range around the 16 high, 17 high, possibly a test of the open if the bulls are really, really strong. Okay, second entry on the high 4 above 35. If you buy it, it's probably better to have a stop 3 ticks below the low, because below the low of the day, because a lot of times on high 4s, the market will go 1 or 2 ticks below the signal bar. Okay, market's working up slowly. Since it's a counter trend trade and it's a trading range day, there will be pullback. I mentioned that I thought this was a good example of one of those 2-point walk away trades. And I should have done it because I would have made my 2 points. I ended up I forgot what I did. I think I scalped out half, and then I got at 2 ticks, and I think I got stopped out with maybe 1 tick profit on the other half. But I made a mistake of not following my own advice. Market broke to the upside on 42.43. That's enough to make it always in long, in my opinion. It's a breakout. 34 through 40-ish was a bear flag, and instead of breaking to the downside, it broke to the upside. You could short 44 as a double top bear flag, but the market just flipped to always in long, and I think there are going to be buyers below and not shorts. So I would rather be buying below. 5-tick failure at the moving average at 46, but that's a high 1, and I don't want to be buying a high 1 unless I'm in a strong bull trend, and I'm not, and I need a strong bull spike, and this is not. So to me, there are going to be shorts above 46. To me, I think the market will probably try to form a high 2, so I'm not sure that those shorts will have enough room below to make a profit. So this is one where I did not short. Double top at 48. Second attempt to go down at 49. I wouldn't short it. I'm looking for a high 2 to buy, but as this high 2 is evolving, we're getting too many dojis and too much overlap in the bar, so it's basically a barbed wire situation, and that makes it hard for me to buy the high 2 at 51. I did not buy it because this turned into more of a barbed wire type of high 2, and that's too risky. Okay, trend bar breakout out of barbed wire. And usually trend bar breakouts from barbed wire fail, but the traders who bought above 35 are looking for 17 or 18 ticks up, so the market at a minimum should hit 32.25. So I'm not going to short here. In fact, I'm looking to buy below bars, and I did buy. We had a 2-legged pullback, I think, to the moving average, and right there, and it held above the 52 low. So I thought that was a good risk-reward trade. Probability maybe 55% that the market would go up to the 32.25, 32.5 area before it fell below the 57 low. So you're risking 4 ticks to make 7 or 8 ticks. I thought that was a good trade.